All right, what's going on, guys? Market review today, July 12th, 2024. So I shared this fair value gap this weekend in the Discord. Okay, my bias is still bullish for the week as long as we don't close past mean threshold of this bullish order block. So if you take these 3 consecutive down close candles here, that is one order block. It's a little cleaner on a 2-day chart here. See that? So daily chart here, just take the high. If you put that on your own charts and draw it all the way through, you'll see that we just traded down into the bullish order block and also into the high of this fair value gap here that I shared in the Discord. And you see me, I have that labeled daily BISI high. Okay, buy side imbalance, sell side inefficiency, BISI. So let's drop down to a lower time frame, 15-minute chart, get a little bit more detail on what took place today. So right away, okay, we have, and my apologies, I actually have the midnight opening price here. All right, so we had high impact news, I believe PPI at 8:30, and notice what we do here. Nasdaq leaves relative equal lows here, right above the high of that daily fair value gap. Okay, so there's sell side underneath these lows. 8:30 high impact news driver. Okay, we drop down. What do? We do 3 things when we drop down, okay, with this move here at 8:30. What do you think those 3 things are? 1, we're sweeping the sell side. Okay, smart money is buying those sell stops. 2, we're trading down inside of the daily fair value gap. Okay, that's a higher time frame PD array. And 3, we're trading down below the midnight opening price. Okay, so that's 3 converging factors as to why it's possible to see higher prices. Okay, if you also go to your daily chart for dollar index, you'll see that dollar was bearish, looking really heavy. So that's another reason, okay, another factor as to expect higher prices in the Nasdaq. Now, look on the left side of this curve here. What is a reasonable draw on liquidity, okay, for the AM session if we're looking at this? Well, we have buy side above this high, blasted through that easily. We have this imbalance. That's a great target intraday if you're trading on a 5-minute, 1-minute chart. But this fair value gap here, okay, this has my interest. Draw it all the way through, boom. I have that labeled 15-minute SIBI, sell side imbalance, buy side inefficiency low, okay, SIBI. That's the low of this fair value gap here. Trading into that there, and then we rotate lower, selling off, taking out sell side here and here. But 15-minute, okay, again, taking out the sell side liquidity, equal lows, trading down into the daily fair value gap. Smart money is buying, okay, underneath that midnight opening price. I talk about that a lot. Fair value gap here, breakaway gap. I get a lot of questions about the breakaway gap. How do I know which fair value gap is going to stay open? How do you know it's a breakaway gap? This and that. It's order flow. So if we know we've been consolidating, okay, our bias is already bullish. We're already expecting higher prices. Dollar's looking heavy. And we're consolidating like this. Consolidating, and boom, we get this massive candle. I want you to think of it like this. Imagine whenever you see a large candle like this, explosive candle outside of a consolidation, and it's in line with your bias. Okay, our bias was bullish. We're getting this large momentum candle, large fair value gap in the direction of our bias. I want you to see that as like a train. Okay, think of a fast train going 300 miles an hour. It's a rocket, right? It's blasting through super fast. Trains aren't going to go 200 miles an hour this way, stop on a dime, and come all the way back down here. That's not what we want to see. Okay, trains are fast, one way, like it's in a hurry. Trains are going, it's moving. Okay, so I'm seeing breakaway gaps as like a train. Consolidating, we're bouncing around, not doing anything. Train comes through, boom, blast through it. I want to see majority of this fair value gap, if not all of this fair value gap, stay open. Okay, that's my mindset behind a breakaway gap. So we get a massive, fast train here, blasting all the way through. We drop down. This is fine. That's a buying opportunity. I want consequent encroachment, okay, midpoint of this fair value gap, and below, I want to see that stay open. That shows me signs that order flow is bullish. Rally up, come all the way back down during lunch. Bullish order block, draw it through, see the bodies respecting the opening price. We rally again all throughout lunch, trading into the high, or sorry, into the low of this 15-minute fair value gap, and then we reverse. Okay, so let's get a little bit more detail. We'll talk about breakaway gaps some more. I get a lot of questions about it. Let me get some water real quick. I gotta catch my breath when I'm doing these things. It's a lot of talking. Feel free to pause your charts, study this for a little bit. All right, let's go. 5-minute chart, same thing, trading below that midnight open, clearing out the sell side, trading inside that daily fair value gap. We rally. Fair value gap here is a breakaway gap. Why is that a breakaway gap? What were we doing before we get this fair value gap? First of all, our bias is bullish. We already established that. We're consolidating, boring price action, not doing anything. Boom, massive train blasting through, fair value gap, hello. I want to see that stay open. Okay, this train is leaving. We don't want to see a train blast through here and then turn around and come back, fill it in. That's not bullish. That's not what we want to see. This train is gone. It needs to get out of here. We're leaving this area. We're leaving this consolidation. I don't want to see it come back. I want to see that stay open. That's what we get. This fair value gap here, that's permissible. We can trade into that. This one here needs to stay open, needs to stay unfilled. This one right here, the upper one, I'm interested in watching how price trades here. All right. Breakaway gap, buying opportunity. Trade down, that's your silver bullet on the 5-minute time frame. We rally up, come back down during lunch, reversing during London close, order block. Okay, it's a little messy in here, but again, if you go to your 15-minute chart, it's just simply one down close candle. This order block is a lot cleaner. On the 5-minute chart, it's anchored to that same opening price. All right, so that's your bullish order block. Look at the bodies respecting that during lunch. We rally, trading into the low of that 15-minute fair value gap. We consolidate during the PM session, and then we'll take a look at this final hour macro, all right, on the 1-minute time frame. And for those who are new to the YouTube channel, this gray shaded area here, that's 10 o'clock to 11 o'clock, silver bullet hour. This is all New York time. Here. This orange area here is your lunch hour, 12 o'clock to 1:30. This is your PM silver bullet hour, 2 o'clock to 3 o'clock. And this is your final hour of trading, final hour macro, 3:15 to 3:45. All right. 1-minute chart. Okay. Gonna give you a minute to study this a little bit while I drink some water. All right, so 1-minute chart here. Now, when it comes to the midnight opening price, this is important. The midnight opening price is only important. It's only of use up to 11 o'clock a.m. Okay, after 11 o'clock, I do not care about the midnight open because we're entering lunch. We're entering the PM session. Okay, it's irrelevant. You can use other opening prices that we'll talk about later in this video. But that midnight open, draw it all the way to 11. After that, take it off your chart. Now, with that being said, 8:30 news, PPI, again, dropping down, taking out sell side, trading below the midnight open, trading to the daily fair value gap. What are we doing here? Consolidate, chopping around, rally up, come back down, boom. Massive fair value gap, train coming through, excuse me, get out the way, I got places to be, breakaway gap. Okay, do you want to see a train blast through 300 miles an hour and then come back down? No, that's not signs of bullish order flow. We want to see this fair value gap run. Why? We're bullish. We're looking for targets up here. So once we see this fair value gap form after consolidating and going sideways, we want to see this thing stay open and continue to run, and we'll find a buying opportunity later. But I don't want to see an optimal trade entry here. I don't want to see us breakaway gap come all the way back down. That's not what we want to see. This needs to stay open. That's telling me that order flow is bullish. We rally. Okay, we form this short-term low, rally up, come back down, taking out the sell stops underneath this low. This is typical, okay, when we're trading this high above the midnight open. Remember, we're in a deep premium above that opening price. Expect some sort of manipulation, stop hunt. Traders who have been making money here. Okay, they're trailing their stop losses up. Drops down, takes them out of the market. Fair value gap here, staying above consequent encroachment. Breakaway gap. Why is that a breakaway gap? How come price only trades down into this higher one and not this one? That's a great question. What are we doing here? It's consolidating. Consolidate, going sideways, chopping around, boring, sleepy price action. Here comes that train blasting through, boom. 200 miles an hour, fast, quick, energetic. We leave a fair value gap. I don't want to see that traded to. Why? We have objectives up here that need to be met. We're in a hurry. We need to get up here. We don't have time to leave a fair value gap here after consolidating just to come all the way back down, trade down to the low. It doesn't make sense for bullish order flow. This needs to stay open. However, this fair value gap here, that's the one you want to use for your entry. That's the better fair value gap. All right. Let's go back. I really want to spend more time on breakaway gaps because I've been getting a lot of questions about it. Okay, back on the 5-minute chart. You want to see this stay open. The higher one here, that's what you want to use for your entry. Let's go back to the 1 minute. All right, same thing. This lower fair value gap here, expect that to stay open. This one, that's your entry. What's also resting in this price action right here? Bullish breaker. We have a low, high, lower low. Take that breaker, draw it through. This breaker is resting pretty much just above this breakaway gap. So do we want to see this fair value gap traded to? No. Why? One, it's a breakaway gap, yes. But also, we have a breaker here. So in order, okay, this is important. In order to trade down to the breakaway gap, that means we have to completely trade down to the bottom of this breaker. That's not what you want to see. You want to see the high of this breaker offer support because it's laying pretty much on top of this higher fair value gap here. So there's no need to come down to this one. So you can feel comfortable putting your stop loss below consequent encroachment. Okay, don't put your stop loss all the way up here. Okay, give it some room in case price does want to stab down, maybe like an institutional order flow entry drill. Take a quick little stab into this fair value gap. That's perfectly fine. Nothing wrong with that. And then we could rally. Okay, that's why sometimes in my trade ideas, you see me placing my stop losses inside of fair value gaps because I'm not expecting this to be traded to. All right, let's move on from that. We form equal highs here, going into lunch. Here's our lunch hour. Now, think about what's happened so far all morning. What has the bias been? What has the price action been all morning? It's been bullish, right? I mean, anybody can see that. We've had bullish price action. We have that 15-minute fair value gap as our drawn liquidity. We fell just short of that. We get to lunch. If we're expecting a continuation, okay, we're expecting higher prices in the second half of the trading day. Expect some sort of sell side stop hunt during lunch, okay? If we're looking for higher prices during the lunch hour, expect a short-term low to be taken out before going higher. Same thing if you're bearish, all right? If you're looking for lower prices in the PM session, expect some sort of short-term high, buy-side liquidity raid to occur during the lunch hour, and then you'll see lower prices, all right? So we had a bullish morning session, fell short of our 15-minute fair value gap objective. Now, that's still our objective, right? We're not abandoning that idea. We get to the lunch hour. This low here, taken out. These clean lows here, short-term low here, and these clean lows here, we drop down, taken out, rally, fair value gap. Now, in the trade I posted earlier today, because I did trade this, okay, I buy it here, wanting to see majority of this fair value gap stay open. We don't, no problem, trading down into this last down close candle, bullish order block, then we rally. Power of three. 12 o'clock opening price. Anything below that is a discount, okay? Power of 3 is fractal. You could use that with the midnight opening price. Your opening price at 12, your opening price at 1:30 is fractal. You can use it for sessions. So power 3, opening price, we drop down. Anything below here is a discount. Drop down, bullish order block below that 12 o'clock opening price. Beautifully there. We rally. You see me pyramid once more on this candle because I'm close to that opening price. Okay, I don't always have to be below it, but I'm close to that opening price. 2 down close candle here is a bullish order block. We open, trade down, tap the high of this candle. Right there. Rally up, consolidate, rally up again. This fair value gap here, another breakaway gap. Why is that a breakaway gap, Tremaine? What are we doing here? Consolidate, sideways, we're stalling. Train coming through, excuse me, boom. Fair value gap here. Don't want to see that traded to. I want to see majority of this fair value gap stay open. It's getting repetitive, isn't it? This higher one here, that's what you want to see offer support. This fair value gap is what you want to see send us higher. That's why in the trade execution, I'm highlighting this fair value gap and I'm ignoring this one. If we take a quick stab down into this, that's fine, but we need to leave consequent encroachment and below that range needs to stay open. Upper fair value gap offering support, exactly what we want to see. Why? We have equal highs up here. This is our drawn liquidity. We're in a hurry to get up there, right? This should not be traded to. We rally, tagging the buy side all the way up into that 15-minute fair value gap. Okay, we reverse, consolidate for the pretty much all of the PM session, silver bullet hour, 2 o'clock to 3 o'clock, just going sideways. We get to that market on close macro, 3:15 to 3:45. Okay, final hour macro. Market closes at 4 o'clock. Really 4:15, but 4 o'clock for simplicity's sake. The 3:15 to 3:45 macro targets liquidity that's still left in the day. So if you think about it, who's all making money, okay, from today's trading? Shorts, yes, but we've just reached an objective. Isn't it reasonable for us to trade into a 15-minute fair value gap, trade down into the last hour of trading, and then trade all the way back up, taking out this high? It's not reasonable because all these traders here are making money, and dollar has reached its sell side objectives, so you can expect some sort of retracement on the dollar index. So higher prices temporarily for dollar, meaning expect some sort of lower prices sell off on the Nasdaq. We see that here in the final hour trading. These lows during lunch taken out, and this low here during the AM session taken out, all during that final hour of trading. Let's look at this a little bit more, go over breakaway gaps one more time. Hopefully this is helping somebody out there, because I get a crazy amount of messages asking how I know which fair value gaps to stay open. This is it right here. This is my entire thought process when I'm taking trades, reading price. This is how I talk to myself when it comes to breakaway gaps. Right here. Consolidate. How do I know this is a breakaway gap? How do you know it's not going to trade up all the way to this up close candle, this bearish order block, right? That's definitely not what I want to see. Why? Slow price action, consolidating, moving up slowly and not really doing much. Boom, train coming through, excuse me, boom. I want to see this stay open. That's signs of momentum. Momentum, strong, fast, energetic, scary, right? We retrace, same thing we see here. Okay, if you remember, this lower fair value gap, we want to see that stay open. The one just above it, that's what I want to see offer support. Here, fair value gap, I want to see that stay open. The one just below it, that's what I want to see send us lower. And you could trust putting your stop loss above consequent encroachment of this fair value gap. Why? Because price can trade up into this. Okay, you don't want to hug your stop loss and put it here if you're entering short in this fair value gap that's being super aggressive. Put your stop loss above consequent encroachment. You don't have to put it above the high or above this up close candle. Put it above consequent encroachment, because if price does want to trade to this fair value gap, poke his head up above this high, that's fine. That's perfectly acceptable. There's nothing wrong with that. As long as we leave the upper half of this inefficiency open, that's telling me that we're really bearish and we're heavy, all right? get your entry in here, but allow for price to trade inside this fair value gap. And then you can see the result, selling off, taking out lunch lows, taking out this low in the AM session. So traders who made money going long all day, if they didn't close or take profits, they're taken out of the market now. And then we consolidate. Oh man, I think this has been the longest market review so far, but this was fun. Hopefully you guys got some insight out of this. I wanted to focus a little bit more on breakaway gaps simply because there were a lot more examples on different time frames using the breakaway gap. So this was also great for me to study. Again, I do these market reviews not only for you guys, but if I didn't have the cameras on, if I didn't have a YouTube channel and all that, I would still be doing stuff like this, talking myself through price action and just building up my skill set of reading price. So that is it. For paid members in the Discord, we have a webinar tomorrow at 10 o'clock New York time. Okay, we're going to do kind of like a live back testing. We're going to go over the market on close macro and a few other topics that I have planned. So tomorrow, Saturday morning, 10 o'clock New York time. I'll see you guys in the webinar. Everyone else, have a great rest of your weekend. Message me if you need anything. All right, I got my phone on me at all times. I'm answering questions all day. All right, I'm here for you guys. And I'll see you guys free stream Monday. All right, Discord. For those who are watching on YouTube right now and are not in the Discord, join the Discord. All right, free stream, tape reading stream Monday morning at 9:30. Hopefully you see everybody in there. It's going to be a lot of fun. We're going to be in there cracking jokes, reading price action. It's going to be a great time. So see you guys Monday morning at 9:30. Have a great rest of y'all's weekend. See you in a couple days. All right, peace.